Ladies and gentlemen, we welcome you all to the Q2 and H1 FY2026 earnings conference call of Jyoti CNC Automation Limited, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company and may involve risks and uncertainties that are difficult to predict. Now, I hand the conference over to Mr. Mohit Kumar from ICICI Securities. Thank you, and over to you, sir.
Thank you, Shloka. Good evening. On behalf of ICICI Securities, I welcome you all to Q2 FY26 earnings conference of Today, we have with us management from
Mr. Mohit?
Yeah, hi.
Could you please repeat your introduction? You are not audible at the moment.
No? Hello?
Yes, sir. Please go ahead.
Hello. Yeah. Thank you, Shloka. Good evening, everyone. On behalf of ICICI Securities, welcome you all to Q2 FY26 earnings conference call of Jyoti CNC Automation Limited. Today, we have with us from the management, Mr. Parker Jadeja, Chairman and Managing Director. We'll start with opening remarks from management, followed by Q&A session.
Thank you, Mohit. Good evening, everyone, and a very welcome to our Q2 and H1 FY26 earning conference call. Along with me, I have a senior management team and SGA, our investor relation advisors. Results and presentation have been uploaded on the stock exchange. I hope everyone has had a chance to go through the same. India is currently witnessing a strong capital investment cycle, supported by a favorable government initiatives such as PLI schemes and various states and central programs that encourage manufacturing. These efforts are reshaping the country's industrial landscape. While India has traditionally been known for its strength in a service sector, the last decade has marked a clear shift with the growing focus on becoming Atmanirbhar and building domestic manufacturing competitiveness. This momentum is particularly visible in sectors like defense, electronic manufacturing services, semiconductors, and automotive, where the capacity creations and technology investments are accelerating. In this environment, the role of mother machine manufacturers, those who build precision machines that in turn produce other machine tools, becomes especially important. As industries expand, the need of high-quality CNC machine tools rise significantly. Today, the Indian CNC machine tool market is estimated around $, close to $3.5 billion in annual demand. Yet, nearly 60% of this requirement is still met through imports. These highlights both a challenge and meaningful opportunity. India must reduce a dependency on external suppliers and develop strong domestic manufacturing capabilities in these strategic segments. At Jyoti CNC, we see ourselves at the center of this transformation. Our vertically integrated manufacturing setup, strong in-house R&D, and deep understanding of high-growth industries give us a clear edge. We not only design and manufacture advanced CNC machines, but we do so with precision, reliability, and cost competitiveness suited to global standards. Our acquisition of Huron, a global leader in high-precision machining, has further strengthened our technological edge and helped us expand our footprint across international markets. Over the year, this strong foundation has allowed us to expand across a wide range of industries, including high-growth sectors such as aerospace, defense, and EMS. We have built relationships with customers of high repute, both in India and overseas, and have steadily increased our wallet share with marquee clients by delivering reliable performance, precision, and service supports. We believe this is our moment, not just to grow as a company, but to contribute meaningfully to India's journey of industrial self-reliance. By building world-class machines in India, for India and the world, we aim to be among the leading machine tools manufacturers globally. Now let me share what we are doing at Jyoti CNC to prepare for the next phase of a growth. The first, we believe that our people are the heart of our progress. As we scale up, we need more than 1,000 plus skilled engineers in coming years. To support this, we are continuously investing in training, upskilling, and grooming our workforce. We are also setting up our own training institute to develop talent in-house so that our people grow with the company and company grow with the people. Second, as announced, to meet the rising demand we are seeing from both traditional industries as well as new age sectors, we need to expand our manufacturing capacity based on our current order pipeline and market outlook. We are scaling our production capacity from 6,000 machines per annum to 16,000 machines per annum by September 2026. This will ensure that we are ready to serve customers quickly and efficiently without compromising on quality. Third, as I mentioned in the previous call, recent geopolitical development have led to higher demand from defense and allied sectors from European customers. We have been engaging closely with these customers and recently participated in a major global exhibition called as a EMO in Germany, where the sentiments and outlook were very positive. In summary, we are expanding capacity, strengthening our talent base, depending our capabilities, and preparing to serve as much larger and more global customer base. We remain financially disciplined and further focused, and we are confident of delivering a sustainable growth in years to come. Coming to the financial and operational performance of Q2 and H1 FY26, we reported a strong consolidated revenue growth of 17.9% for the quarter, standing at rupees 508 crores. Our performance for this first half of the year was also strong, with consolidated revenue of rupees 918 crores in H1 FY26 compared to rupees 792 crores in H1 FY25, reflecting the growth of 15.8%. In terms of a revenue contribution, across the industries in quarter 2, 36% came from aerospace and defense, 26% from auto and auto components, 21% from general engineering, and other remaining 17% from the other areas. Our order intake for quarter 2 FY26 stood at rupees 619 crores. This includes a 44% from aerospace and defense, means 272 crores, 23% from auto and auto component, 142 crores, 22% from the general engineering, 136 crores, and 11% from the other sectors. The capacity utilization for the quarter 2 FY26 was 88%. Picking up of our current order book, it remains healthy and well diversified at rupees 4,546 crores, reflecting steady demand and continued customers' confidence. The industries-wise breakup is as of follows: 40% of aerospace and defense, 20% of a general engineering, 17% of auto and auto components, 15% from the EMS, 4% from the die and mold, and balance from the other sectors. Coming to the margin, EBITDA for Q2 FY26 stood to rupees 124.6 crores as a growth of 17% compared to the same period last year. EBITDA margin were 24.5%, which is broadly in line with the last year, primarily due to the increase in employee expenses and other expenses. But still, it is in line with our near to guidance over there. Profit after tax for Q2 FY26 stood at rupees 85.5 crores compared to rupees 75.9 crores in Q2 FY25, reflecting a growth of 13%. We believe we are into strong position to build on this momentum. The industry opportunity is large. Our order book is healthy, and our capacity expansion and talent development efforts are progressing well. With our vertically integrated manufacturing capacities, strong R&D focus, and expanding presence across high-growth sectors, we are confident of strengthening our leadership in the Indian market and growing our footprint globally. We remain committed to discipline, execution, customer trust, and building a world-class machine in India, for the India and the world. We may now open the floor for question and answers.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, you are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. The first question comes from the line of Harshit Patel from Equirus Securities. Please go ahead.
Hi, thank you very much for the opportunity, sir. Sir, firstly, on our capacities, you have mentioned that our overall utilization currently stands at about 88%. And our
for this quarter?
For this quarter, yes, sir. And our expansion from 6,000 machines to 16,000, that will become operational sometime in September 26. So in this interim period of 3 to 4 quarters, how do we plan to grow meaningfully, given that we have such a huge order book?
Yeah, so that's the only constraint today, Harshit, with us. And we are trying to, let's say, optimizing all our processes and everything and trying to stretch. So today, this quarter, we have reached to 88% of utilization. And the next 2 quarters, we will have something little bit more than our capacity, we will grow more the capacity over there. But until the full capacity will coming to our utilization, we have to wait for this the further more growth over there.
Understood. Sir, secondly, our order intake momentum has continued in the second quarter as well. And for the first half of FY26, we have received almost 425 crores worth of orders from aerospace and defense alone. So could you explain where these orders have come from? And out of this 425 crores, what would be the India contribution? And what would be from Europe and other geographies? And also, yes.
Yeah, complete this.
And so just a follow-up to that, given that we are about to complete our debottlenecking exercise at Huron, and we have kind of doubled our production capacity over there, so if you can give us the execution roadmap over.
So, Harshit, basically, out of this 425 crores, so the first time we were discussing all the time to let's say the India is coming in our kitty more and more that, okay. So in this 2 quarters, and particularly in the last quarter, okay, we have received close to 180 crores worth of orders only from the Indian defense area there, all our ordnance factories and all. And rest others are, we have a global customers from Europe, even from the China, even from the Turkey, and mainly from the Germany. So, but the larger component has come from the Indian domestic player over here. Okay. So this is about the order book intake. What your first questions are there? Regarding the second questions is the Huron. The Huron, the facility has been switched on now. It started our operational from September, and we will see the witnessing over there to on a revenue conversion will come on a last quarter largely over there, because the process time of assembly of the machine is close to 4 to 6 months. So first batch of a production is already on floor and we have started. So it is going to be executed there. All this capacity will be utilized and everything. So the first fruits we will see in the last quarter of this year, it means the next quarter, and then following the next year completely we will come into a full-fledged on a utilizations over there. Hope this will be in line with your questions.
Yes, sir. Thank you very much for answering my questions. I'll come back in the queue.
Thank you.
Thank you. Participants who wish to ask their questions may press star and 1. The next question comes from the line of Aniket Jain from Yes Securities. Please go ahead.
Good evening, sir. Hope you are doing well. So actually I wanted to check on, there is a material increase in employee cost this quarter. So I believe that it is mainly due to the expansion plan that you are currently undergoing. So when do we plan to complete this hiring program that we are currently undergoing? So that is question 1.
Hiring
so when we will be completing the hiring program? So when will you stop hiring additional employees?
So Aniket, na?
Yes, sir.
Yeah. So Aniket, already we have started hiring last year, and gradually every quarter you see this, our manpower cost also is rising, because already based on the next year capacity, we are looking the people at our in our factory 1 and 1.5 year back. So already today we already hired the people. Still we are hiring, but not much. Almost 80 to 90% people already on roll there now. Okay.
Understood, sir. And sir,
yeah.
So second question would be on the EMS revenue. So I see that this time you have booked about 25-30 crores of revenues in EMS. So have the deliveries resumed now, or will these continue going forward, and what is the plan to, when will this order backlog be fully delivered?
So basically, in our last call also, I was discussing that it has been started slowly, and we are expecting to grow in the last quarter. Okay, third quarter also will be some of the things like that, but the larger we are expecting from the last quarter execution will be there.
Got it, sir. I'll get back to in the queue for the questions. Thank you.
Thank you. Participants who wish to ask their questions may press star and 1 on your touchtone phone. And the next question is from the line of Anuj from Kotak Securities. Please go ahead.
Hello.
Yes, are you audible?
Yeah. Congratulations on a good set of numbers.
Thank you.
Just wanted to understand what are the kind of volume growth that we are seeing in fiscal 26 and for the full year as well.
What are the
volume growth we are seeing for first half of fiscal 26 and what are our expectations for full year FY26, sir?
Okay. So generally, we don't, let's say, talk on a numbers directly. Okay. We don't give this kind of a guideline directly on that. Okay. On a forward looking. But let's say the growth momentums are going to be maintained. And usually our tradition into the first half and second half, okay, is more or less is a 40-60 kind of a ratios are there. Okay. So always the third and fourth quarter is going to be the highest executions we are looking in terms of a numbers over there for our traditional industrial practices on this manufacturing of a machine tools there.
Understood, sir. And sir, on the cost side, our margins are one of the best in the industries. To what extent are we vertically integrated to have achieved these kind of margins?
So basically, we are fully vertically integrated in terms of our manufacturing side. It's on a cost side. Let's say we do our castings, we do all critical part machinings. In a machine tools, the most critical assembly is generally the spindles, we call it as the turrets, we call it as the rotatables, we call it pallet changer, a tool changer, and many of this precision and sheet metal manufacturing and all like that. Generally, the industries, these kind of a higher end assemblies and all people are importing from the Europeans and Japanese areas like that. There in Jyoti, we are highly integrated, so that's the adding the value additions we are reaching over here much better from the industry standard. As well as our, let's say, the application point of view, let's say we do a lot of tooled up machines. We do a lot of customer-centric machines and supporting to the customers. There we are able to value additions are much better. And third is, let's say, the product mix. Okay. So we are having a very large product baskets and variety of products, and to let's say the machine value, the minimum machine value in our product basket is 10 lakhs, and the biggest machines I'm supplying is to 20 crores. Okay, so this kind of a product mix is allowing me to have a better margin compared to the industry standards there, what the people are having there.
Understood. That is very helpful. Thank you.
Thank you.
Thank you. As a reminder, participants who wish to ask their questions may press star and 1 on their touchtone phone. The next question comes from the line of Yash Patel from Kotak AMC. Please go ahead.
Sir, I wanted to ask you a question about the Huma control panel that you are developing. So, what would be the margin impact after this panel has been developed, and are you going to use this panel in the extended capacity of 16,000 and all the 16,000 machines that you are going to develop?
Thank you. Yes. See, Huma is basically is an operating system. We call it the HMI. Is a front end for my customers there. Okay. So today, this Huma is in top of the what we bought a controller from Fanuc or a Siemens. So we have made this HMI is a common for all these two and make more user friendly to the customers. In the future, yes, we are going to develop our own controllers, drives, motors. That's already we are in progress. We are into under the PLI scheme. We are also is going to be apply for that. With that, once that all the hardware and software are completely integrated with the Huma, and we are going to develop this. Yes, we are going to utilizing this all from all our 16,000 machines, and we are expecting to gross margin to be increased close to a 4 to 5% over there.
Okay, thank you so much, sir.
Thank you. Participants, if you wish to ask your questions, you may press star and 1. And the next question comes from the line of Kamlesh Bagmar from Lotus Asset Managers. Please go ahead.
Yeah. Thanks for the opportunity. Sir, would you please give the breakup of machines sold in this quarter and along with the revenue?
What, Kamlesh bhai?
Machines sold during the quarter with the breakup of revenue.
Yeah, one moment, please. So, we have sold 1,315 machines in quarter 2 at an average realization of a 38.62.
And sir, breakup between, like, say, mid, high, and entry level along with the revenue?
Yeah. So, basically, 208 machine. Number of machines. Yeah. So, value-wise, 252 crores. Machine-wise, 1,237 machines. It's an entry-level product. Mid-level is close to 69. And at 69, number of machine also is close to 69. An average value is 1 crore. And a high value is 164 machines with the machine is 9. And the average machine is 18 crore 26 lakhs. Okay. So total is 1,315. This is the breakup.
Okay. And secondly, on the employee cost, the employee cost has risen by roughly around 33% year-over-year, 19% quarter-over-quarter. But if I see the number of employees, they are, let's say, stable for last 3 quarters at 3,500 count. So why we are seeing such a sharp increase in the staff cost?
Yeah. So basically, Kamlesh bhai, this year our let's say the compensation quarter, we have compensated the salary increase of the people in a second quarter, and it has been implemented from the 1st April and given all the areas and everything. So settle down like that. That's why the cost is, you are seeing sharp rise in this quarter.
So where can we see it normalizing, and even on the other expenses side?
So so basically now it is with this is a normal the cost of the manpower now, and in terms of this quarter you have seen a little bit more expenses. This is a jump due to the 2 to 3 parameters. One is in manufacturing activities has been increased greatly, so that the cost has been increased, and that will be compensated with the next sort of dispatches on next 2 quarters. And marketing, let's say this is one of the biggest event we have participated in Germany, is the highest cost for us. So because of that, the marketing cost has increased. These expenses are like that on this quarter.
Okay. And so lastly, your 10,000 machine capacity expansion. So how that would be phased out? Like it would be coming in September 2026. So how the ramp up would be? So over the, like say, after a quarter from September 2026, would it get like say 10,000 machines? Would it get utilized at 20-25%? So how the ramp up would be?
So I have given you in the past also the answer similarly. This ramp up will be, let's say we are looking to be a growth continuation for the next 3 to 4 years. And we would like to maintain this trajectory between 30 to 35%. So this will help us, and we will maintain our growth trajectory for the next 2 to 3 years based on this expansion project.
Great, sir. And sir, what is our target on the machines? Like say in this first half, we have sold roughly around 430 odd machines. So for the year as a whole, so where do we see, like say 95% utilization level for the rest of the?
So definitely we'll cross 90% numbers. We will cross 90% plus.
Great, sir. Thanks a lot, sir. Thanks a lot.
Yeah.
Thank you. Participants, if you wish to ask your questions, may press star and 1. The next question comes from the line of Akshay from AK Investment. Please go ahead.
Hello, sir. Thanks for giving me the opportunity. Am I audible?
Yeah, yes.
Yeah. Okay, sir. First of all, congratulations for the good set of numbers. Sir, my first question is about Huron capacity. So what was the Huron capacity before the expansion, and what it is currently, and what kind of average realization that we have over there for one machine, for average machine?
Yeah. So basically the Huron, in terms of a capacity, there was a 32 million euro deliverables from the model mix over there. Okay. And now with this capacity expansion, we have reached out to close to 70 to 75 million euro top line we are able to execute it over there. Okay. Based on the model mix there.
Okay. And based on this new expanded capacity, when can we reach to 80 to 90% utilization over there in next how many?
So we are in a Huron also, we are expecting to grow year on year close to 30 to 35% there.
Okay, sir. So at a consolidated level, we will grow by 30 to 35% for the next 2 to 4 years, right?
Correct.
And this year itself, we are expecting similar kind of growth in this financial year as well.
Absolutely.
Okay, sir. Okay, and sir, my second question is okay, that is already answered. Thank you so much, sir, and all the best for the future.
Thank you very much.
Thank you. Participants, if you wish to ask your questions, you may press star and 1. The next question comes from the line of Yash Patel from Kotak AMC. Please go ahead.
Hi, sir.
Hi, yes, bye.
This is Ishan from Yash. Just one small thing I wanted to understand here, that what is the point of 4 to 5%?
Mr. Yash?
Yes, sir.
Hello?
Mr. Yash, you're not audible. Mr. Yash?
Is it better now?
Yes, sir. Please go ahead.
Sir, this is Ishan. Yash's.
Sir, you're still not audible. May you please reconnect and use handsets and get back to the queue?
You can do it on
for better communication.
Is this better now?
Go ahead. So you're still not audible? Please rejoin the queue. The next question comes from the line of Jayesh Shah from OHM Portfolio Equity Research. Please go ahead.
Hi, am I audible?
Yes.
Okay. Sir, thanks for the opportunity. I just had this one question. You're talking of 30-35% CAGR growth, but but we see that you are capacity constrained for this year and perhaps first half of next year. So, which is why in the first half we have grown only by 15%. So, how much is the realistic growth expectation for this year and next year? Because 30-35% looks difficult, right?
So, Jayesh bhai, basically always our this first and second half is to be little different, okay? And based on our capacity utilization and the model mix, okay? We are still on the track as per the delivering and the target to be achieved on a second half and this year, okay? And because of, let's say in this quarter, our Huron capacity comes in a picture. So we will see the last quarter that numbers also giving us a better add-on value to us on our revenues over there here. Okay. So that
second half
capacity
we will have much better product mix, if not capacity utilization.
Correct. And based on the total utilization, we are still on track to reach out our target, what we are anticipating on this year there. Okay. And the next year, yes, the next year is a more challengeable because now the 30-35% grow from here, but now our capacity is absolutely on track this time. Okay. And we are anticipating some of the things will start utilizing little early there also. Okay.
I see.
And
but once you install the expansion, by September 26, how fast can you ramp up the additional capacity?
So basically, there are some assembly building, machine shop buildings and everything is getting ready, basically starting from, let's say, January, February onwards. Okay. So all the installations and everything is going to start from, let's say, a couple of months early before the September there. Okay. So there are many things that today is our bottleneck. It is going to resolve. So we see the second quarter will be a good quarter for us to utilize some of the capacity over there. And then gradually we will ramp up on a third and fourth quarter of the next year. Basically.
I see. Thank you very much and best of luck.
Thank you.
Thank you. Participants, if you wish to ask your questions, may press star and 1. The next question comes from the line of Aniket Jain from Yes Securities. Please go ahead.
Sir, I wanted to check that the other financial assets have increased materially in this H1 from 538 crores to almost 673 crores. And I believe a good portion of that is the unbilled revenues. So what is driving this increase in unbilled revenues and why we are not able to bill this to customers and then show that as trade receivables?
So you see that this quarter, the numbers of 9 machine and 164, these are the very large machines, okay? And it is partially built up like that, okay? And now we are enhancing our capacity over here as well as Huron there also now started there for the large machine there. So that you will see now we reach to a stabilization level and then regularly month on month sales will come on a pictures over there. Okay. So pipes are being filled and this is all our 5-axis and large machines cycles there. The cycles are very long, more than 1 year like that. Okay.
So these machines are usually built at any milestone levels or are these 3 or 4 months level at what intervals?
Is a milestone level there.
It is at milestone level. So second question would be on that you currently have an order backlog of about 4,500 crores, which I believe you should be able to deliver it between 18 to 24 months or so. So post the capacity expansion, is there a possibility that we'll see accelerated deliveries post September, or how is the delivery timeline structured out of this 4,500 crores of order backlog?
Basically, this 4,500 crore backlog, once my delivery will start furthermore, okay, we will able to receive further more orders. Right now we are tied up and we are not able to give the delivery for this kind of a special machine less than 2 years like that. Okay. Once that will be improved, we will see further more upside on that in order book side also. But that we are able to see it from next year onward. Once my customers also been confident about the delivery, we'll able to increase over there basically.
Understood, sir. And sir, probably if I can squeeze in one last question. So when we are talking about the international markets, mainly the European markets, so is it more skewed towards the aerospace side or towards the defense side? Because I believe the maybe the growth dynamics are slightly different for both the end markets. So how should we think about which end market are you delivering or serving more?
Basically, my customers are a common, okay? Let's say this customers, let's say General Electric, GE is manufacturing aerospace as well as for defense, okay? So we don't know what is exactly output is going from where there. Okay. But largely in Europe right now, this all the French companies and everyone, those our customers are mainly on a defense side there.
Mainly defense side. Understood, sir. That was it from me, and best of luck.
Thank you. The next question comes from the line of Keshav Bharadia from Wolford Financial Services. Please go ahead.
Hello, sir. Thank you for taking my question. Sir, congrats on being able to generate a positive cash flow at the end of H1 compared to last year and Q4 of last year. So just given the nature of the business and our working capital cycle, what gives us the confidence to be able to sustain cash flow momentum going forward, possibly by the end of the year and once our incremental capacity goes live next year?
So yes, Kesavai, thank you very much. You pointed out a nice topic that. So now we entered based on our line on a cash flow, and we are looking further more better momentum from here to end of this year. We will see a much better numbers in terms of operating cash flow in coming quarters there.
Understood, sir. And sir, another question I had was in regards to the recent land that we acquired in Tumkuru in Karnataka. So is that for the next leg of growth, or are we looking at something else over there? In terms of like once our entire 10,000 capacity goes live, are we looking for further increase in capacity over there, or?
So in this questions I have answered last time to some another guy. I'll give you the answer to you here. So basically, our southern customers, South India customers, are very high on this electronic manufacturing and all. So we are going near to them to support in terms of a spare part, in terms of their application. So we are going to have a demo centers and warehouses and quick service supports to them basically. We are not looking to be any further more large capacity expansion over there, but rather we are going to near to the customers to have some small assemblies and to some fixturing, some solutions and R&D activity near to my customers over there basically.
Understood, sir. And sir, I also saw in our investor presentation that we have plans to enter the semiconductor segment 2 years down the line. But could you throw some color as of today what our plans are for that segment and how we're looking at creating a presence over there?
So basically, we are in purely a capital, let's say the machine manufacturer, and our focus area is to build a machine. So right now our R&D team is focusing and working with the semiconductor manufacturing machine builders and all. And we are making some of the equipment for them. So we are designing and developing 1 or 2 products right now. And it's a very high precision zone for all of us. This is the first time it's happening in India also. So we are learning and we are expecting within 2 years it should be commercialized over there for a in terms of a manufacturing processing of this semiconductor there.
Got it, sir. Thank you so much. I'll come back in the queue.
Thank you. Participants, if you wish to ask your questions, you may press star and 1. And the next question is from the line of Deepesh Kashyap from Invesco. Please go ahead.
Yeah, hi, sir. Thanks for taking my questions. So what is the total capex that you're looking at for this year?
So, capex, what we have planned for a total 450 crores. Okay. And I think largely we will finish let's say 3/4% will finish this year itself.
Sorry, how much percent?
Let's say almost 75 to 80% we will reach this year itself.
Okay. And pending will be next year?
Next year, first half. Yeah, first quarter.
Okay. Understood. Understood. And sir, the total capacity utilization that you have given in the first half is around 80-odd%, and you're targeting around 90% of the full year. So that will come to around 100% utilization in the second half, right? Is that even possible? So just wanted to understand how much is the realistic capacity utilization that you can do in a quarter?
So basically, this first half average will reach 81%.
Yeah.
Okay. And definitely we will, in a second half, we will reach to almost 90 to 100% in between there. We may hit to, right now we are looking to be, on last quarter, we will hit more than 100 there.
So 100% is possible, you're saying?
Yeah. On a policies base. Let's say in the last quarter, everybody's our pull and push are like that. So we are able to execute those things like, yeah.
Understood. And so based on the order book that you have given the number, right, in crores you have given that, if I just roughly do the math, that is coming out to be 11,000, 12,000 machines that you have to deliver. Can you give a timeline of what is the execution timeline that you have to give? And with the new capacity coming in next year, how much can you deliver in next year, if you can give just a broader understanding?
So the next year, we already committed to our customers to close to 10,000 machines.
10,000 machines?
Yeah.
Okay.
That is
our
commitment.
That is possible? When your new capacity is coming in September, do you think you can be able to do that? Because 10,000 is a very big, steep jump from the current delivery that we will do this year, right? Yeah.
I think that's our commitment, and we try to achieve that. But I think around in between 8,500 to in between 9,000 is definitely we are going to show there.
Understood. And so lastly, though we're happy to see the positive operating cash flow, but still a very small number, right? So, like, what is your target for this number, like, for the full year? And what are the things that you're doing to improve this operating cash flow?
Deepesh is just the beginning.
Sure. That's the growth has slowed down.
Let's say in last year, let's say it was minus 100 crores, 100 plus.
Yeah.
So this first half we have crossed 50. And we will incrementally it will be more than this basically.
So sir, last year the growth was also 35-40%. This first half our growth is around 15-odd%. So that's what I am asking. So if the growth slowed down, generally operating cash flow should ideally improve, right? Anyway, so you're saying the second half we should see a meaningful improvement in the numbers that you're saying.
Correct.
Understood.
Meaningful improvement.
Got it, sir. Got it. Thank you, sir. All the best.
Thank you, Deepesh. Thank you.
Thank you. The next question is from the line of Nishant from Kotak AMC. Please go ahead.
Hi, sir. Is my voice audible?
Yes, audible, clearly.
Yeah. Thank you so much, sir, for the opportunity. Just a couple of quick questions. One, alluding to my colleague's point on the Huma controller. So what is the timeline you're looking at for kind of coming out with that controller, and when can we expect that 4 to 5% margin, incremental margins in your overall financials? That's my first question, please.
It's a little bit longer journey, but the prototype is the total we are looking to be in next 12 to 18 months.
Okay. And sir, currently you were saying that you are vertically integrated, so just wanted to understand if a certain cost of a machine is X, how much of it is currently built in-house and how much of it is kind of imported?
So still in our total purchase, we have close to a 30% is imports. Okay. Particularly this still, let's say the CNC controllers, drives, motors, specific bearing elements. Some of the people are, let's say they have giving from India, but that's all our import product, very high precision bearings and all. The hydraulic components, the pneumatic component, and basically all the sensors are coming from Germany and Japan there.
Okay, so 70% is announced, 30% is imported, correct?
Yeah.
Okay. That's it from my side. All the very best for the future, sir. Thank you so much for the opportunity. Thanks. Take care.
Thank you. Due to time constraints, this was the last question for today's conference call. I now hand the conference over to the management of Jyoti CNC Automation Limited for their closing comments. Over to you, sir.
Thank you all for joining us today. I hope we address all your questions. We remain committed to keeping the investment community informed the regular updates on any development in the company. For any further information or queries, please feel free to reach out to us or SGA, our investor relations advisors. Thank you very much to all of you and have a wonderful day ahead to all of you.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.